Hey everybody, Jesus Sosa with the podcast of the week. Guys, I wanted to talk to you about what's really going on in the marketplace, right? So it's a very interesting time of the year or things that we're doing right now as far as finances are concerned. I actually had a meeting this morning with some people that I do some financial consulting with, and you know, the answer for one of the girls was, "Well, I'm glad I stayed on the right side of the bed this morning because everything sounds negative." What we need to do is, I think we need to really be cognizant, be understanding of what's really going on in the marketplace, right? As far as what the interest rates are going to be doing and affecting us, right? I think that that's going to really be the difference between us really surviving all this stuff and not surviving, right? So interest rates right now in Europe are about anywhere between 11 to 13%. The thing that really concerns me is the fact that I think, for to be honest with you, is the fact that uh, Americans, right? We don't really look at spending because we use credit cards, right? Everything is plastic. So when the credit card company decides to cut the plastic off, right? They're not gonna call you. They're gonna send you a letter, and when you go swipe your card, you had $10,000 credit limit. Now you're gonna have a $5,000 credit limit, right? So guess what happens then? When you have a $5,000 credit limit versus a $10,000 credit limit, and you have $4,000 on the credit card, and you're gonna go buy whatever, go on a trip, you don't have enough money to be able to buy the trip, and the card is now declined. So then things starts to change, right? So that's what inflation is going to be doing to us, right? Inflation is going to cause a lot of issues for us, and the reason why they're going to cause issues for us is not just housing that's going to go up, right? So right now, guys, the reality is that interest rates for an FHA is around 6.5, right? The reality of a conventional loan is around 6.75 to 8%. I mean 6.75, you know, to 6.875%, right? Not 6 to 7%. So they're talking about the interest rates going to 8% before December. What does that mean to the average person? Well, I really believe that the rich are not going to get affected by inflation, right? They're going to cut back on their spending. They're not going to go traveling on their jet as much as they did in the past, right? They're not going to go to, let's say, France for the weekend, right? They might do it once in a while, but it's really going to affect the lower to middle income families, right? The people that live paycheck to paycheck, the families that have 3 or 4 kids, right? That now are trying to figure out how they're going to get enough money to be able to, qualify and to be able to pay for their stuff, right? Not just to buy a house, but to do everything, right? That's the biggest problem that we got. And I think that that's the major issue in the United States, is that when we really go in there, right, we're talking about, if you get a credit card at 29% versus it being at 9.99%, it's a 20% increase, guys. So you're talking about your payment is going to go from $90 a month to probably about $200 a month on that credit card if you have a $5,000 or $6,000 debt on it, right? Now, it's also going to affect the purchase of a car, right? It's going to affect the purchase of clothes. Why is that? Because now it's going to cost more to make the piece of clothes that you're going to buy, the sneakers, the shirts, whatever it is. And then the credit card companies are going to raise the rates to 29%, right? Who knows? They might even try to go higher than that. That's the word on the street. But inflation is not stopping. And the reason being is because we here in the United States are basically spending so much money on credit cards, right? And we're building so much debt. And the government used a lot of that money. They were printing money, right? To be able to keep us afloat during the pandemic, because a lot of people weren't working, right? But now everybody's back to work. So guess what? Most people are now flying to Europe for the weekend. Like most people, like some girl told me the other day, I've never seen so many people go to Greece, right? I've never seen so many people go to Italy in the last 2 months or the last 3 months, right? Because people are just going. They're saying, like, you know what, the dollar's even with the European, with the pound or with just the euro, right? So it's never really happened before. Usually it used to be, it was 120 for every dollar, right? That you were losing 20 cents on a dollar. Now you're gaining 10, 15 cents on a dollar, or you're even, right? Depending on the week or the month that you're out there. So it's allowing people to be able to go to Europe. Flights are cheaper, right? Because they weren't as expensive as before. But inflation is coming, guys. And inflation, what the government is afraid of is inflation is going to become not just a recession, but a mini depression, right? And that's what they're really scared of, is if it becomes a mini depression, then we're really in trouble. So Look, let's look on the bright side, right? Because we're gonna really look and make sure that the let's look at the positive sides. So if you're able to maintain yourself, right, and handle all of these pressures, right? Like they say, diamonds are made out of pressure, right? So because it's just a rock, right? And the pressure and the diamond is what builds it, right? So let's say you can handle all this pressure for the next, 6 months to a year, year and a half, then there's going to be a lot of opportunities out there for you to be able to do different things. But you have to maintain yourself. So going out to buy a $15,000, watch right now, or to go out and buy a $90,000 car is not really something that I would strongly suggest to you guys, right? You should buy your house because if you're paying rent of $3,000 a month, it might be better for you to pay $3,300 in rent and then refinance in 6 months to a year and a half, and get the better interest rates. Rates should be coming back down, guys. The only reason why the rates are going up is the same reason why they went down, right? So the rates went from 5.5, 6%. The national average has always been around 6.5 to 7%, right? That's basically where we're at today. So that's the normal. Then the pandemic hit. Everything got shut down. Everything went crazy, right? Nobody was working. Everybody was stuck at home, right? And then the craziness happened that the real estate market went crazy, right? Instead of it going down because people were scared of people dying, they went the other way, right? The people that were living in a one-bedroom apartment in New York with 500 square feet, they came down to Florida because Florida never closed, and they came down to see their cousin, and they saw that the cousin had a huge backyard with 5 bedrooms and 4 baths in Homestead, and they were paying $265 for the house, and the monthly payment was $1,800. They're like, yo, I'm in. Where do I buy, right? So they all started coming down here. Well, New Yorkers are moving back, right? This hurricane also affected a lot of things on the West Coast, which we're praying for those people on the West Coast, right? Because the people on the West Coast of Florida are really hurt in Naples, over Fort Myers, Cape Coral. So we're praying for those people there in Sanibel Island and all that stuff. But a lot of those people that are in Sanibel Island and in Naples and all that other stuff are going to be moving back to Florida. Let's be real about it, right? They're going to be moving back to Miami and Fort Lauderdale because that's where their families originally are from, right? They're originally from, Miami, Fort Lauderdale, all that other stuff, right? So we want to make sure that we get all these people in there and get it all set up. You follow me? So at the end of the day, it's very important for you guys to understand that inflation is not going to go away. It's not a joke. It's not a game. It's not something that people are doing for the hell of it. It's the government is scared of a recession / depression, right? And they're trying to move fast to try to stop that. So the only way that they're going to stop this is if they continue to raise the interest rates and stop people from spending. It's not working so far, right, guys? It's been 4 months now. So technically after 2 months, right, of the IP being a bad number, right, then that's already technically a recession. We're basically going into the 4th month. In a couple of weeks, they're going to do the 4th month. The inflation is still going to be around 8%, right? They were afraid of it going to 9. It's still around 8, right? So it's not stopping, right? It's not dropping to 6.5, 7, which is what they thought it was going to happen when they raised the rates. So the government already announced that in November they're going to raise 0.75, maybe 1%. And then in December, the same thing. If that happens, guys, and you keep waiting, guess what? The interest rates are going to be about 8. So just like I told you guys, and I hate saying this to my buyers and to people that we've been talking about, but back in January, February, I told people make sure that you try to buy now because the interest rates are still around 3.5, 3.75%. You can even get a 3.25% FHA, but the conventionals were 3.75, right? And then all of a sudden, the rates went to 4. And I actually closed a deal with this realtor named Maria, and she was complaining that her client got a 4.25% back in the end of May, right? Beginning of April, the beginning of May, middle of May, something like that. And that's actually a really good rate for a conventional loan, right? Now it's almost 7%, right? So now that payment, instead of it being like $2,700, is now going to be $3,500, right? So it's a huge difference in payment, right? When you go from a 4 to a 5 to a 6 to a 7 to an 8, right? It's doubling. So it already doubled, right? But remember, guys, before the pandemic, the interest rate went down so low because the government was lending itself money. They were printing money, and they didn't want to pay interest on that money they were printing. It wasn't because they wanted to do us a favor. They had to pay back the interest, and they didn't want to. So if you really think about it, now the economy is back to normal, but they gave away too much money. They printed too much money is the reality, right? So since they printed so much money, now they're up to their neck in debt. So how do you fix that? You gotta maintain inflation lower. You gotta stop, the recession from growing like that. And then the only way they can do it is by raising interest rates. So I just think that the interest rates are going to continue to go up to 8% by Christmas or January of next year. You're probably going to see it January 15th. You're going to see that the interest rates are going to go be around about 8. And then I think that by June or July or August, they'll be back down around the 6.5, 7%. And I think that that's going to be an opportunity for us to answer some of the questions. Hey guys, I have a couple of things here. I got a couple of questions that came in from some people out in the street. So let me just read this one here. So, Jesus, what do you think about the market? Is the market going to drop? Well, it doesn't really matter, right? I got that from Valeska, right? So Valeska sent that in. Is the market going to drop? It's really not going to drop, right? Because if your interest rate is 7% and your payment is now $3,000 on a $300,000 house, when before at 3% it was $1,800, who's really winning, right? So Valeska, no, I don't think that the market's going to drop. And then the other thing is, there's 3 other reasons, right, Valeska? So number one is going to be that, there's a shortage of inventory. That's number one, right? So even though we are dropping, prices are going back to stabilizing a little bit. There's not 25 offers on a property. There's still low inventory. Number two, I think the people with the hurricane on the west coast of Florida got to come back to Miami, which affects us in Miami and South Florida and Fort Lauderdale and the Broward counties. So I think that is going to affect us too. And number three, people will not qualify, right? Because they just don't qualify for those interest rates for the purchase of a house at $400,000. So what do? You put it on the market for $450 because the guy sold his for $450 6 months ago. And then you're stubborn, the seller's stubborn, and says, I'm not going to sell it for less than $450 because Henry got a $450 for his house, and my house is better than Henry's. I got a pool, he doesn't. How do you get $450? Well, things change, guys, right? So the market's changed. So since the market's changed, why is Henry going to pay for, why is Henry going to be getting $450 and now I'm going to get $390? I'm not doing it. So guess what? Seller's remorse is going to kick in. So when seller's remorse kicks in, the listing stays on the market for 5 or 6 months because he doesn't want to drop the price. Then the appraisal comes in for the FHA and is at $380. The appraisal for conventional comes back at $382. And the guy's like, I'm not selling it for less than $450. So guess what happens to that house? That house is gone. It's been sitting there for 6 months to a year, but we haven't gotten anything, right? So at the end of the day, I think, Valeska, that those are the 3 things that are going to affect the marketplace. And no, I don't believe that the housing market is going to crash. I think it's going to stabilize to the point that it's going to be, how would I say, right now you were getting, like 6 months ago, you were getting a $400,000 house was getting 20 offers. With 3 offers, about 10, 20, 30,000 above asking price. Today, a $400,000 house is getting 5 offers with maybe 1 offer like $5,000 above asking price, right? And now what I think is going to be that same $400,000 houses, we're keeping the same things the same. I think that $400,000 house is going to drop to $380, $375, right? And then they're going to be getting the offers, and then the seller's going to have to give a $5,000 to $10,000 credit to be able to sell that house at $375. That's what's going to happen, I think, February, January, March, right? So listen, guys, people still got to live. And the crazy thing is this. The landlord's got a taste of rent at $3,000, $2,000, $4,000. They're not dropping the rents again, right? They'd rather go Airbnb than give you rents at $2,000 or $1,500 again. They're not going to happen, right? So they might as well go Airbnb or they're going to sell a house, right? Because at the end of the day, they don't want the headaches. Listen, I'm an investor. You know how many headaches I had just thinking about, are these guys going to pay the rent when there was the modification? The government decided, I don't get involved in politics, but this was like a socialistic move, right? They decided that us investors, hey, listen, you pay the rent, the people living there don't have to pay the rent. That's total bullshit, right? You don't need that, right? How is it that I have to pay the rent and the people that are renting from me don't have to pay the rent, right? That's nonsense, right? And I don't, and I'm telling you, that's total bullshit, right? Total BS. There's no way in the world that people should be able to live for free, go out and buy a car, go out and get a jet ski and go on a trip, while me, the investor that's paying all the bills, paying the taxes, paying the insurance, has to continue paying. If not, my credit goes down, right? It doesn't make sense, right? And to get a modification as an investor was almost impossible. So I think a lot of the landlords, a lot of investors got sour on that, right? And they're like, you know what? Screw this. We're going to raise the rents. If they want to live there, great. If not, we'll make it Airbnb. If not, I'll sell it. And that is going to avoid all the other nonsense out there, right? So I don't think that the market is going to crash. right? I think that the market is going to be, doing what it needs to do to survive. That's the number one thing. Number two, I strongly believe that the housing market is strong, right? So, listen, guys, I remember when I started in this business 15 years ago. This was like the market was like around, like, let's say $175,000 was the average price of a house in Florida, right? Miami. Now you're talking about a house being like, 450,000 is the average. 432, I think, is Miami, right? That's crazy. So if you're a realtor and you're making 3% on a property back in 2000, right? 1998, for example, right? 2000 and 1999, 2005, whatever the number was, right? You're gonna make $4,000, $5,000 on a deal. Today, just because of the amount of money that the prices are going, you're making 12,000. You're making 2 to 3 times as much as you were in the past, because the fact is that the housing prices went up. Are they going to go down? I think they're going to stabilize. I don't like using the word down, because I think the prices are going to stabilize to a number, right? Again, people can ask for whatever they want, right? Like if I got this watch on, I can say this watch to me is worth 10 grand, but if I go buy it in the store, it's worth 3 grand or 4 grand, right? Whatever the number is. Perception is people's reality. So we got one more question here I want to go over before we get out of here, guys. And again, this is a question from Danny. And Danny asked me, do you expect interest rates to go up? Well, again, just like I said before, I think the interest rates are going to go to 8%. Right? I strongly believe the interest rate is going to go to 8%. Why do I believe that? Because I think that us as Americans, right? Like I've taken 4 trips in the last 2 months, right? A couple of them for business, a couple of them for vacation, right? But like I went to New York to see my mom and my dad for the weekend. $400 for an airfare, right? Before I used to pay 190, $200. During the pandemic, I was paying $80 to go round trip. Now it's $432. So guess what? I didn't stop. I put it on my credit card. Same thing that everybody else is doing. So I think that the inflation is going to continue for the next 4 to 5 or 6 months. And since the inflation is going to continue for 4 to 5 or 6 months, what's going to happen is that the government is going to continue to raise rates. And then the interest rates on the credit cards, then people are going to get their credit cards slashed, right? You cannot go buy a car for 0% interest now. You got to pay 5 to 7%, maybe 9%. I actually saw a guy that came into the office, right, the other day, and he's paying 19% on his car. He just went out and got a loan. He said, I didn't buy it. It was a Honda. Listen, the guy he was trying to buy a $27,000 Honda Accord. I remember when I bought my first Honda that my dad bought, it was like 14 grand. And that was a top of the line Honda back in 2003 or 2002, right? Top of the line Honda was like 14 grand. Now it's 27 for the lower model, and he got a 19% interest rate. Guess what his payment was? Almost $600 a month. It's crazy. For 5 years. It wasn't like it was a 4-year, 48-month, right? That's what my dad got for that Honda, was a 48-month plan. These people are paying 5 years, 60 months at $600. It's almost like 40 grand. All that interest is going into, in the car is like 27 plus all the taxes and everything thrown in there. The guy's paying 40 grand for the car at the end of the day, right? And the car dealerships are making a killing. I'm doing a loan for a couple of car guys, and guess what, guys? These guys are killing it. They're making $200,000, $300,000 with Lexus or Cadillac, selling you cars at $115,000. So, guys, the good thing is if you can hang in there and you can make this thing work for you and your family, you got great interest rates on the houses. If you already bought them, you'll be able to, do that. And if you're paying $2,000 to $4,000 in rent, right, or the landlord just calls you and say, listen, I'm going to sell the house or I'm going to do an Airbnb, you got to move out at the end of your lease, then you should be looking for a house. It doesn't matter. Like I tell people, 8% interest is better than 100% rent, right? So you have to remember that. 8% interest or 7% interest is better than 100% rent. So if we can do that, then I think you guys are going to be fine, and you'll be able to build some equity, guys. Listen, real estate is relative. Real estate can go up. It's been crazy the last 3 years. It's been up to like 25%, but you really, the property values go up anywhere between 4 to 6% a year. We've been going up 20, 25% for the last 3 years. I did a refinance for a guy who bought a house for $199, and the value came back at $320 a year and a half later. So 100% increase, right? 100, almost like 80% to not exaggerated, right? 75%. That's crazy, right? So look, guys, if you need anything, stay positive, save your money, stop traveling, stop spending, And you got to know, you can always, make sure you subscribe to us on YouTube and Spotify. And make sure that you give us a call and look at us on TikTok, Facebook, and Instagram, guys. Miami Mortgage Group. Black Jesus in the house.